Hey guys, and welcome to the Working Money Channel. Kevin Malone here on Twitter posting this. So you guys know what happened to the stock market the last two times this happened. What he is pointing out here is the quantitative easing that has now resumed, $152.85 billion. So discount window borrowing in the trillions, guys. Look at what happened here, okay? We did see a spike back in 2008. Of course, we know what happened in 2009. And then again, during the beer flu lockdown in 2020, comparatively, if we take a look at the charts, let's just take a look at the S&P 500 just for some reference here on the daily. Let me get rid of that. Let me get rid of some of that. Okay, let me zoom out here and going back to, when was that again? 2008, 2009. What happened in 2008 and 2009? An ensuing crash for the stock market. And then again, if we go back here, again in 2020, bring this over here and just taking a look at 2020, March 2020, right over here, the exact same thing happened. The stock market down by about 35% before rebounding and making new all-time highs. Now, here's where we are today, guys, and many have been saying this is just not looking good. And even if we just take a look at this in isolation, this pattern here on the chart, no new highs are being formed. We didn't see that V-bottom recovery. We did see lower lows. Now we're making higher highs. If you guys take a look at the S&P 500 on the daily, we are making higher highs. However, this is still not instilling confidence in investors. Here's another one. The U.S. Federal Reserve, or the Fed, just printed $300 billion out of thin air last week to bail out the banks. What a joke and voodoo economics. This is not free market or even capitalism. If developing nations want $300 billion, they have to sell their sovereignty to the IMF and the World Bank. This coming from S.L. Campton here on Twitter. And what he is demonstrating here, the quantitative easing, jumping. I've been seeing this chart a lot here on Twitter. Arthur Hayes here explaining it. In case you don't comprehend how serious the U.S. banking problems are, here's the balance sheet. These loans are newly printed money or a form of quantitative easing. They increased the Fed's balance sheet by $300 billion, as I just mentioned. In other words, in just 1 week, the Fed reversed roughly half of all the QT it accomplished over the past year. So just taking a look at this chart here, basically, the QT quantitative tightening basically brought us down over the period of 2022. And then now we're seeing this spike up again. Half of QT done in the last year was reversed this week, as you guys can see in this chart. So what is this going to do to the market, to crypto? Here's another perspective on this from Crypto Nova here on Twitter. The end of the bear market and the beginning of the bull market. Maybe for cryptocurrency specifically, the Federal Reserve added $300 billion to the balance sheet this week. The last time they added a large amount over a single week was shortly after the beer flu dip. We all knew what happened to the markets back then. So as I showed you guys on the chart earlier, the crypto markets are up this week as the impact of the ongoing U.S. banking crisis plays out. The Federal Reserve has injected $300 billion into the economy. Some are calling this move the end of quantitative tightening and the beginning of quantitative easing again. For those wondering what that means, okay, number one, quantitative tightening is pulling money out of the economy, raising interest rates so people won't be able to loan money anymore from the banks. Good to combat inflation, but bearish for risk on assets like crypto and stocks. So that is what we were obviously seeing throughout 2022. Bringing up the total market cap here, you guys can see, we've been talking about this every single day. 2022 essentially brought the market down. Taking a percentage tool up here, we did see the market decline by about 75% during this period in time. Just going down here, quantitative tightening is injecting money into the economy. Print money to save the economy short term and make them pay for it afterwards. Rising inflation, but bullish for risk-on assets like crypto and stock. So are we going to see a reversal? Whether the Fed keeps raising interest rates to combat inflation or not doesn't matter anymore. They printed again. Inflation will rise again. The damage has already been done. Why? They had no choice. At least that's what they want us to believe. And maybe it is. It's the lesser of two evils to save the economy short term. Not only that, but crypto is slowly seen as a safe haven by investors amid warnings that more banks could fail. So that was the other thing that I wanted to bring up. In and amidst this banking, last weekend when SVB went under, we did see a shift in the market. Let me bring up Bitcoin specifically, and I talked about this last week on Friday. That was kind of the reversal point for Bitcoin. Friday, Saturday, we did see Bitcoin reverse, move to the upside, and over just last week, we did see a rise of about 42% total for Bitcoin in particular. So there's a warning more banks could fail. Many analysts draw a striking contrast between March 2020 and this month's Fed Fund to rescue banks from the edge. The Bank Term Funding Program, whether we will see a full-scale bullish environment remains to be seen. Interest rates remain high, but there is absolutely no ignoring the fact that they are printing trillions of dollars again. And we even got Peter Schiff giving his comment here. Peter Schiff, the famous economist, said by the end of the month, the balance sheet could reach a new high. Rate hikes don't matter. Inflation is headed much higher thanks to bank bailouts. Whatever happens is to be seen, but one thing is for certain, the macro environment has changed, and we are not sitting in the same situation as the last 18-month downtrend. So guys, we are entering a new era. Some are saying this is going to be bullish for crypto. Others are taking a look at this particular chart and saying, well, what happened those other times? This first chart here, what happened those other times when we saw this quantitative easing? At least right now, crypto is bullish. We got Bitcoin. It did reach a $28,000 price right up here. It reached that overnight, or almost $28,000. It's about $27,800. We got XRP also moving to the upside, albeit not by much in comparison. This is all very interesting because analysts are looking at banks and where American banks are going, and I think this is really going to dictate where crypto goes. If there is a large, you got to remember, back in 2008, there was no Bitcoin at that time. Bitcoin came out of that crisis. So we don't really actually know how crypto would react in the case of a big financial banking crisis in the United States. Academic study flags 186 banks as vulnerable to a run as Silicon Valley Bank was. So over the last week, they've been busy doing their homework. Bank fragility is tied to this type of asset held on balance sheets being worth less, partly because of rising interest rates, guys. And 186 banks are seen as vulnerable. A new academic study to bank fragility concludes that 186 U.S. banks remain vulnerable to a run on deposits like the one that doomed Silicon Valley, Signature Bank, and Silvergate Bank in the past week. This paper by 4 professors concluded that the U.S. banking system's market value assets of $2 trillion is lower than suggested by their book value of assets, accounting for loan portfolios held to maturity. And here's a quote, guys. Marked to market banks' assets have declined by an average of 10% across all the banks, with the bottom 5th percentile experiencing a decline of 20%, according to this study. Oh, God. Oh, man. I'm reading this for the first time, by the way, and so, numbers just are not looking good. The researchers found 186 banks with a negative insured deposit coverage ratio. Banks in this bucket could be putting insured deposits at risk. The study did not name the banks or take into account the role of the Fed's new Bank Term Funding Program, which was announced last weekend. I gotta say, though, all in all, by and large, this does not look good. Flagging 186 banks, have we not learned anything from the last financial crisis? Lynn Alden here also noticing this. Fractional reserve banking is hitting highs in terms of Google searches or Google trend searches recently. I don't know if that's bullish or bearish, but it is fun. And here we have it, guys, the trend growing. And this is from 2004 to present day. So this takes into account quite a long time frame. And look at this, the dotted line is representing where we are at today. So the interest is there, and people are worried, obviously. Financial Services GOP posting this on Twitter. Chairman Patrick McHenry and Ranking Member Representative Maxine Waters announced a bipartisan hearing with federal financial regulators in response to the failures of SVB, Signature Bank, to be held on March 29th, 2023. So they are going to be looking at this. Obviously, this could mean really negative consequences for the U.S. banking sector. All reasons why we're still all wondering why and how is it that XRP, and Ripple still do not have clarity in the United States? Do you feel like you're also banging your head against a brick wall, just wondering, hey, what the heck is going on here? Why has nobody done anything yet? I mean, this could be a perfect solution. In other parts of the world, though, we're getting more Ripple and XRP adoption. This one from T-Hole Bedict XRP, cross-border payment fintech currency fair, Thunes to reach 25 currencies, including the Mexican peso. So we know Thunes is a Ripple partner, and Currency Fair has now announced a partnership with Thunes. They're going to support the Currency Fair to offer their money transfers in 25 new currencies, including the Mexican peso. This represents a growth in current markets by more than 100%, so doubling their market share. Through this partnership, Currency Fair customers and business customers can now send, exchange, and transfer money in more countries, benefiting from Currency Fair's competitive rates, fast, reliable transfers, and excellent customer customer service. And here, focusing on the Mexican peso, a huge remittance corridor in North America, the launch of the Mexican peso represents a significant opportunity for currency fair. Remittance flows into Latin America reached $142 billion in 2022, rising 9.3%. That's the other thing. All these numbers keep rising. So, the need for this technology is always there. In 2021, it was a recorded 21.6% from 2020, of which Mexico received $60 billion. A staggering 94.9% was sent from the United States, where Currency Fair launched last year. So we are excited to build our presence in this market following the launch of the Mexican peso. You guys see here, I mean, the United States is a big part of this. Clearly, there are still obstacles in the way. There are still roadblocks because of the lawsuit, but everywhere else they're opening up these corridors. I feel like the rails are being built, and once we finally get that clarity in the United States, it's going to be that last piece of the puzzle that needs to be put in place to finally really kind of benefit fully from RippleNet and XRP adoption. So wanted to thank T. Holbedic for posting that. Wheezy at Nerd Nation Unboxed found an interesting clip here. Jay Clayton getting interviewed by Andrew Bond.
Lastly, there was a lot of money, and people got very entrenched views about whether crypto should be embraced or rejected. Well, crypto is a technology. My view is it should be embraced to the extent it makes everything better. Some of the people who thought it should be embraced were like, well, it may not make regulation better, but we should just go ahead anyway.
It's a technology and it should be embraced, says Jay Clayton, the person that sued Ripple and hurt hundreds of retail investors, then left to work for the competition. Yeah, you can't make this stuff up. The other traitor to the XRP community in the crypto world is also catching flack here from some in the XRP community. The other day, we talked a little bit about Coinbase and their response to relisting XRP once there is a verdict in the case. But the XRP community just was not having it. Ashley Prosper originally tweeting this out. Loyalty should be rewarded. So as the community, we should pledge not to use Coinbase, even if they do relist XRP. Uphold has been around and has been loyal to us this entire time. So she's saying, use Uphold instead. Mark Phillips, retweeting this out and echoing this sentiment. I will not use Coinbase because they are clearly biased towards Ethereum and against XRP. Coinbase's delist decisions are driven by their Ethereum alliance and investments, not by legal risk management. So I don't know if you guys do live in the United States, do put it down in the comments section. How many of you guys have already decided I am not using Coinbase anymore? How many of you guys have also used Uphold to purchase XRP during this long delisting period from about January of 21 till today? I would be curious to know how many people out there are actually in the same situation. Regardless though, Ripple keeps moving and progressing overseas. Another one here from T. Holbedic. BankServe Africa engines have been turned on, guys. Take a look at this. Reserve Bank and BankServe Africa launch new instant payment service. The South African Reserve Bank and BankServe Africa officially launched a new payment service called PayShap on Monday in a bid to make banking more accessible and inclusive. And as T. Holbedic points out here, BankServe Africa did select TCS Banks, or BANCS, and their XRP-powered Quartz solution to drive SA's rapid payment program. He posted this back in February of 2022. With billions of transactions worth trillions of dollars, BankServe Africa is Africa's largest automated clearinghouse. SA is a known ODL corridor. And guys, here is all the supporting documentation just to give you guys some more details on that. So now we're seeing another partnership here, BankServe Africa and the Reserve Bank launching a new instant payment service called PayShap. So, we are seeing more adoption. The United States, again, as I mentioned, the last piece of the puzzle is going to be the last piece of the puzzle because of what this guy did back in 2020. Yeah, I know. It's okay, though, because I think there's going to be more of a reason than ever to be adopting XRP in the United States. Now, I just caught wind of this. Bank of America to buy Signature Bank, says Bill Ackman. He mentioned this on Twitter in a tweet just yesterday. He said Bank of America is going to acquire Signature Bank on Monday without citing any sources to information. So it is unconfirmed. However, this is what Bill Ackman did actively post on Twitter. Pretty bold statement, I gotta say, if he didn't, in fact, have any supporting reasons to post this. I'm hearing that Bank of America is going to buy Signature Bank on Monday. Unless and until we can protect uninsured deposits, the cost of capital is going to rise for smaller banks, pushing them to merge or be acquired by the SIBs. I don't think this is good for America at all. So Bank of America, one of the bigger banks, I mean, as a sidebar, they are a Ripple partner. I mean, it's just logical for them to, move in this direction, to make this kind of move, buying Signature Bank. But, it's going to be the consolidation of, the banking sector at this point in time. Gone are the days of having a multitude of smaller banks and, being able to pick and choose where you want to put your money. And then it's just going to be the big banks eventually where, the big banks hold all the wealth, hold all the power. The power becomes more centralized. Obviously, we know too that the big banking sector is in cahoots with one another. They want the control. They want to be able to retain that control. Fintech has been coming in and disrupting the banking sector. And so we know fintechs like Ripple and XRP are going to play their role because we also know that they are playing ball. We know that they are following the rules, and behind the scenes, banks like Bank of America are adapting RippleNet and are essentially ready to move once we do have that clarity for XRP, clarity for holding banks. I'm sure want to be able to hold XRP, and we still don't have that clarity. So once we do have that clarity, we're really going to start to see things rolling, I think. And guys, I think it's sooner rather than later. When we were talking about this in 2021 and 2022, talking about the Great Reset, we were just dipping our toes into this Great Reset. I think many of us didn't even know. We couldn't even feel it. But now, guys, I'm feeling it more than ever. We are in the midst of this thing. And, these bank collapses, this is not something that should be catching a lot of us by surprise. If you've been following my channel over the last couple of years, at least, or, at least since the beer flu took hold, we are now actively in the midst of it. And maybe, just maybe, we should be expecting another black swan event. I happen to see this from Ian Binns. Kevin O'Leary, investor and one of the personalities on Shark Tank, he says he's telling startup CEOs to limit bank deposits. So he's actively going out and saying, listen, guys, banking sector also in trouble, and brace yourself for the next black swan idiot blow up, as he puts it. So here's what Kevin O'Leary is saying. He says, we've told our CEOs do not put more than 20% of liquid assets in any one institution. I don't care who you know or how big they are. There's always the next black swan idiot manager in big and small banks. So we don't know who they are, O'Leary said in an interview with Yahoo Finance on Wednesday. His comments come shortly after the failure of Silicon Valley Bank. Its collapse has sparked a steep sell-off in bank stocks and fears of a 1980-style banking crisis. But the problems are less systemic and more due to idiot management at SVB and an incompetent board that know nothing about banking, said Kevin O'Leary. He added that assets from his own companies were tied up in the bank, though he didn't disclose the total amount. In particular, O'Leary blasted the SVB's high exposure to long-term bonds. Bond prices have sunk over the past years amid the Fed's interest rate hikes to control inflation, leading to $620 in unrealized losses across all U.S. banks, according to estimates from the FDIC. So even now, Kevin O'Leary is coming out and saying, guys, there is likely going to be another black swan event, and we should be ready. And the timing really does seem uncanny, doesn't it? We do have FedNow payments real-time launching real-time payments in July of 2023, so July of this year. I talked a little bit about this in a video I did the other day. Some in the XRP community were wondering, are they going to use XRP? Are they using Cypherium? I'll link the video that I did up here in the top right-hand corner. I think by and large, though, in a nutshell, we could be exposed to both technologies, and I do explain why in that video. Interesting, though, this one from Mr. Mann. The Federal Reserve's FedNow real-time payment rail debut is imminent. As I mentioned, July of 2023. Financial institutions, including banks and credit unions, have been using services from Zelle to rails like RTP networks and the clearinghouse. So, the old technology is taking a back seat to real-time payments. And I feel in some ways the banking sector in the United States has been pushed to move in this direction. Banks and enterprises are committing to instant payments. The customer hesitation to make instant payments a core feature of their financial lives will be brief. Businesses will migrate away from checks and wires and will find that straight-through processing will transform commercial payments. Now, the reason I say, it's convenient timing, obviously, from what we've been talking about in this video, the quantitative easing has started again. And what has happened generally during these points in time? Collapses, traditionally in the stock market. This time, though, guys, could it be different? And the reason I say that is this interview here from Caitlin Long. Listen to how she describes what is going to be happening now with the going live in July of this year.
And if you look at the balance sheets of the banks, virtually none of them are sitting on enough cash to back demand deposits that can be withdrawn at the speed of minutes now. So here's the thing. It used to be you had to go to a bank branch and fill out a paper form to make a bank withdrawal. Now you can do it on your phone. What's interesting is that the bank regulators have for a long time hated the most tech forward banks. They like the concept that everything has to be analog because it slows everything down. Just yesterday, the Fed confirmed that FedNow, which is the new payment system that is ultimately going to replace FedWire, is coming online in July. And it's a 24/7, 365 system. And there was a lot of information in the press release about the testing requirements that the banks that are going to be rolling it out in July will have to comply with. There was zero acknowledgement that the speed of money movement is going to increase inherently when you get a real-time system. So we were talking about how long it takes for you to put the payment instruction in, analog versus online banking or API. But now there's also speed up of settlement once the instruction is received by the bank. And that is going to be real time. Now, FedNow only limits you to $100,000 at a time, but $100,000 at a time equals increased bank run risk inherently. And I was floored that the Fed said nothing in that press release about requiring the banks that are going to be offering FedNow to hold more liquidity. It means they don't get it yet.
So, as Caitlin Long points out here, zero acknowledgement that the speed of settlement will increase. And because of the nature of the real-time payments, right? Well, what does that also increase? She mentions the limit of $100,000, but this also increases the risk of bank runs inherently. Think of it, if you can pull out $100,000 at the speed of light and everybody can pull out $100,000 at the speed of light, and we're in this kind of situation, people being worried, 186 banks being vulnerable as flagged by a recent academic paper, well, what is that really going to mean, guys? A run on the banks in the United States accelerated by the fact that the government is ushering in instant payments. Now there's that point that we have not addressed. If Ripple and XRP do see clarity in the United States at that point in time, are we going to have a mechanism to be able to source for that liquidity? Are these companies going to be able to kick into high gear right away, leverage XRP for that liquidity in case there is, in fact, a bank run? Unprecedented because of the speed of real-time payments coming down the pipe by the Fed in July of 2023. All things that I definitely think we should consider and also make me go, that's just my opinion, though. I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.